All right, welcome to this lecture. I'm going to talk to you about some of the things I learned when I created my own business. And when you start to grow a business, you'll have more and more information requirements both internally and externally, and some of the challenges related to that. But first, let's talk about creating a company in its infancy and what motivates a person to create their own company and build that company. So I picked up a book in 1995 called Disciplines of Market Leaders. And as I read through the book, it talked about niche markets and niche products and how to be a market leader. And it really emphasized three things: operational excellence, product leadership, and customer intimacy. Operational excellence meaning you're going to produce something, you've got to make sure that you do it in an excellent way. Streamline the process, have the tools you need, make sure the employees have the tools they need to deliver successfully to your customers. Product leadership, making sure that you had a product that people wanted. So I talked a lot about niches, and ultimately that's what I developed, was a consulting niche related to data analytics for large corporation or big data. And so that was my product. And then finally, customer intimacy. And that's not only having a good relationship with your customers, but picking the type of customers that you want to have as part of your portfolio of customers. So let's talk about the key questions to ask yourself. One is, when you're going to start your own business, what do I love to do, or what do I love to make that I'm also talented at doing or making? Some people love to do things, but it may not be something they're talented at. Like, I loved playing baseball, but I wasn't talented enough to be a Major League Baseball player. So as much as I loved it, that's something that I wouldn't consider myself talented enough to do. So I had to figure out what that was. Secondly, is from that list, which of these talents will people or companies actually pay me to do? So I picked big data and being able to do auditing and analyzing big data. So that was something that I knew companies didn't necessarily have the resources, the skills, even the talent to be able to do. So that's something that met that criteria for me. Next, of those willing payers, which type of entity did I want to work with? Well, if it was big data that I wanted, I had to pick companies with big data. I also wanted companies that I knew would be financially stable, would be able to pay their bills. Because one of the things I learned from CPA firms is people will have you do their taxes or their financial statements, but they don't always pay or have the ability to pay, and so there's a loss. In fact, I think the one entity that I worked with would normally write off almost 25%, 20 to 25% of all of the billings that they had. They would write that off because they weren't going to be able to collect it all. So I wanted clients that would actually pay in full for the time that I spent on it. So that's why I say pick the entities you want to do business with. And then finally, apply those disciplines of market leadership, making sure you had an excellent operational process, you picked a good product that you liked to do, that delivered to your customers what they needed, and finally, strong emphasis on picking your customers and having good customer relationships where there was a good working relationship back and forth, so that you knew you could continually develop your product. They were continually happy with the product that you delivered. Okay, so now let's say you decide you've got something that you want to make or you buy or whatever it is, but you've got a product that you want to sell. So you're able to produce it. So the thing you need to do is find somebody that's willing to buy it. So you've got a customer. So now you've got your first sale. And now that you know you've got a business, you'll go to an attorney, you'll set up that business, you'll do all the paperwork related to making sure whether it's an LLC or if you decide to incorporate, that's why you need an attorney. Next, you go to the bank and you set up an account because once this money starts coming in, you're going to have some place to put it. So, there really is your first system that you've got, in which you can pull reporting of your bank account from. So, you establish this bank relationship. You've got a place now when the money comes in from your customers to put it. You also have bills that you'll have to pay, and so you'll be writing it out of that banking account. But maybe you don't have a lot of customers, so you don't have a lot of checks that you're going to be depositing, or electronic funds transfers in, and maybe you don't have a lot of checks that you're writing out either. So it's a very simple process. You can probably just manage it like you do now with your ATM card. You know what your balance is, it's in and out, it's pretty easy. But eventually, you're going to want to know a little more about your information. So you're going to want to get a system like Quicken, or even some people put it on Excel. So they have all their transactions, both ins and outs, accounting transactions through Excel. Quicken is basically a checkbook writing system. So you can have all your banking transactions and you can kind of categorize it. So you'll know how much you might have spent on utilities or products or things like that. You'll also see those customer checks come in as revenue. So there's your basic system for just one customer. But eventually you're going to get more customers. And when you get more customers, then the challenge is going to start to pop up where I'll have to manage more information. And then I might have to buy more products. So now I've got to have vendors out there that I'll have to have maybe accounts payables with, where I will buy something from them on credit, and then I'll turn around and sell it to my customers, and I might be selling it to them on credit or accepting cash. But I'm going to have payables and receivables from my customer that eventually I'll collect money on, and payables to my vendors that I'm going to have to eventually pay money out to. And through this, I may have inventory. If I'm in the service business, essentially my people that I hire will be the ones that make the money for me. But if I have a manufacturing business, then that inventory is going to pile up or be part of my process, that I'm going to have to spend money for that inventory and manage it properly, which again, I'll want an information system to see how much inventory should I have. Have I bought too much? Do I need to buy less? Do my customers have demands that require me to have a lot of inventory because it takes a while to get this product? So these are all decisions I'm going to make which require information to be able to do that. And through that, I'm going to need something besides my little Quicken or Excel spreadsheet. I might have to get the next level up system like a QuickBooks, which has a full accounting system. Or I might decide to go to NetSuite or Xero, something that's out on the cloud to track my accounting transactions and give me better information that I can make decisions from. And I might still need Excel because I'm going to have to export things so that I can do some analytics on them. Maybe I want to understand what the costing is of my inventory to develop better prices. That's forecasting that I might not be able to do in a system like QuickBooks that I could be able to do on another system like Excel. And then I'm going to hire people because I've got all this happening now. I've got payroll. And with payroll, I'm going to probably have to add an accounting department in there to manage those receivables, payables, payroll, do some of the reporting that's going on. So it won't be just one accountant as I grow. I'll have many accountants. But then there might be an information system related to payroll like ADP or Paychex, which again, I may export data off into Excel. I may take ADP data and enter it into my QuickBooks system. Then I get big enough where I may actually have to have an HR department. If I got an HR department, they're going to require systems like Taleo, where they can look at candidates and hire candidates, HMS, or even Kronos to track time off and timekeeping. And there's many systems out there. But you can see I've already started to add a few systems. And then maybe my facilities have gotten to a point where I've got to buy a building or construct a building. And so I might need a capital asset system like Asset Panda or Sage or something like that to keep track of these capital assets that I'm buying. And then I'll come up with product innovations to make my product better. So I'll have to track how I'm making that product better through some management system like AHA, Bright Idea, or PlanView, where I'm seeing the different ways I could make my product better or make new products and offer new products to my customers. Now I've got another system with data. And then I've got this global Salesforce team that's out there selling product for me. And now I have to add customer service to that. So I might have a system like Salesforce that keeps all customer contracts in there, helps keep track of, the contact that we've made with different customers and keeping track of any pricing, benefits that they get, discounts and rebates. Again, a whole new system in Salesforce that I'm keeping track of to have this information about my customers, clients, and the products that they buy. Then we're getting bigger. We're expanding to global operations, whether it's through acquisition or natural growth. And if we do acquisition, they're going to have their own financial systems and accounting systems that say you've got Europe. There might be systems that are used in Europe that we don't have in the United States, or systems in the Asia area or the Middle East that aren't the same ones that we use in where we started our little operation and from QuickBooks have grown to now we're going to need an ERP system that will track all of these things globally. So now I'm hiring an information systems group, and I may have already done this through this process, but they're going to keep track of all these systems, and they're going to make sure they connect and talk to each other so that that information that I extract will actually make sense. And in fact, now I'll update from my QuickBooks NetSuite or Xero to an ERP system that's global like SAP or Oracle or maybe even D365. So these are ERP systems that try to take pieces of these other systems and put them all into one area that I could potentially use for my operations. But I'm still going to have systems like Salesforce that are going to help me out with keeping track of customer contracts. I'm still going to have potentially ADP as a payroll system because I may not do that through my ERP system. So just because I have one big ERP system doesn't mean I'm going to get rid of all these other systems. I may be able to get rid of some. So the problem with some of these ERP systems are the data is in modules and it's hard to put it all together. So my next step might be to create a data warehouse. And in that data warehouse, I'm going to collect all the pieces of data so that my users, or a data lake, can pull information out of the ERP system and be able to analyze it to make business decisions. So now that I've got this data warehouse and data lake, I should be able to satisfy a lot of both the internal and external reporting requirements that I've got. Now, if I become a publicly traded company, and as a publicly traded company, I'm going to have Sarbanes-Oxley requirements that I'm also going to have to meet. So I might get a company or get some SOX software like Workiva and use that to track all of the testing that I do of my information and internal controls and any of the reporting and certifications that need to come from these SOX requirements. And all I can say is, because there's just so many systems and requirements, internal reports that are required, external reports that need to meet, you can see why there are so many challenges that a company has. And all we did was start out wanting to build a nice product with our customers. And because we were so successful, it's grown into this crazy picture that you see in front of you. And that's what companies' challenges are, to try to make this as efficient as possible, make sure that the information that they're getting is accurate and complete and reliable so that when they make a good business decision, they're making it based on true, actual information. Because the last thing you want is a company to have layoffs based on misinformation. So when we talk about the importance of internal reporting, we use it to make pricing decisions. That information that comes in, are we charging our customers enough so that we can make a profit? So pricing is important. We also use that internal information to make versus buy decisions. Currently, we might buy a product. How much would it cost to actually make that product internally? Do we have to buy equipment? Do we have to hire personnel? Or it might be the flip. We have historically made a product, but we see that there's an outside vendor that might be able to sell the same level of quality or better quality for less cost than if we make it internally. We might accept special orders with the information we've got. We might turn down special orders where something's coming at a special request. Should we do it or shouldn't we do it? With our normal capacity and our normal tools, can we do it with the resources we have? We can also look at our inventory levels and our safety stock, meaning we need to always have a certain level of a particular item on inventory because it takes a while to order it or build it. So what is that safety stock level? This is all decided based on internal information that you've gotten from all the crazy systems I showed you on the last chart. How about employee compensation incentives? If you meet in certain sales goals, you'll get a certain bonus. Well, we need good internal information to make sure that A, did they meet those sales goals? But B, are those profitable customers? Do we have the right incentives set up so that we will still make money while we're incenting our employees to continually to grow the business? There are customer and dealer rebates in which we can offer special deals to our customers. You hit a certain level of sales, where you've bought our product, we'll give you a little rebate back. Much like when a credit card company will give you a little cash back if you hit certain levels. Same thing that companies do with their customers or their dealers. The dealers are the distributors that buy their product and then sell it to other customers. There might be incentives or rebates for them also. But we want to make sure that our pricing is right and we're not giving them so much of a rebate that we actually lose money. But we can only do that through internal information. How about if we want to buy some new equipment? So we need to understand the cost, the use, what that cost will be when it's spread into our pricing decisions. Will our customers be able to pay for it? Or will that piece of equipment replace resources that we currently have or an old piece of equipment and actually improve our margins just by buying it? So we may have to spend a lot of money for that equipment, but we might be making so much better profit that it'll quickly recover the cost of buying that equipment. We can only do that with internal information. How about constructing a facility? We've rented. Now we want to buy a facility, or maybe we want to construct a facility. What's the cost of that? Both from a cash flow standpoint, because we're also not only looking at profit, we're also looking at what the cash impact is on that. How about acquire another company? Should we or shouldn't we? Is it a company that will actually replace some of the purchasing that we do so that potentially it reduces our costs? Is it a company that's a competitor that when we bring them in will actually help get more customers in areas that we've wanted that we haven't been able to grow to? So we won't know specifically how that's going to impact our information until we do some forecasting using internal reporting. How about layoffs or hiring? If we hit certain levels where we're not making money, do we lay people off? Are we at a point where we can't grow unless we hire more people? These are typical decisions that you have to make, and you're not only using forecasting and and assumptions that you will be making as an individual who owns the business. You'll be using internal information to make sure that it's a good decision. So those are things that you need to consider, and there's just a few of them. There's a lot more uses of internal information, but you'll see none of these really affects what we're going to talk about in a minute about external reporting and external reporting users. So let's talk about that now. So the importance of external reporting. You've got all that internal information you've put together, but there's going to be certain requirements that you'll have to put out to the external community, especially when you're a publicly traded company. You don't have to just be a publicly traded company, but publicly traded companies have huge list of requirements that they have to meet to report to the external world. So you've got your company. And your company is going to take all that information, that internal reporting information that you've got, and pull out aspects of it so that you can do your tax return. So you'll be reporting to the government your tax return. You'll also be putting information together for the bank if you have some sort of loan. You'll also be putting information together for the SEC, like your annual filings. So let's look at some of the external users. You've got your board of directors, your audit committee that's going to want to see what the financial situation is of the company. You've got the external auditors, especially when you're a publicly traded company. They're going to be auditing you and then signing off and giving an opinion on your financials. You've got shareholders that want to get that information, and also potential shareholders that are going to make a decision on whether they're going to buy your stock, all based on that information that you're putting out externally. You've got customers that want to see, am I dealing with a company that can produce and supply things? Are they viable? Are they going to be around a while? Because my customers need that supply of information I'm giving, a product that I'm selling to them. If it doesn't look like I'm going to be around a while, or I'm not running a successful company, they may not want to be my customers any longer. I've got suppliers or vendors that are selling me product. They want to make sure I'm a viable company too, because am I going to pay my bills? They're selling me product. Does it look like I'm financially able to pay my bills? There's banks out there that have given me loans or given our company loans. They want to know that we'll be able to pay that back. They want to see what our cash flow situation is, what our income is. Will we be a viable company that will pay back a loan if they loan it to us, or in some cases they've already loaned it to us? Do I still meet all the covenants of the loan that the bank is expecting me to meet? Governmental agencies. And it's not just the IRS wanting to get taxed. There's other governmental agencies that want to make sure you're complying with Foreign Corrupt Practice Acts, sunshine laws, all these things that an entity that is out doing business globally is following, or internally within the nation paying the taxes that they're supposed to be paying. There's also governmental entities that give out grants that when they give that grant, they want to make sure you're doing everything that you said you would do to get that grant. And finally, it can be even labor unions. And there's more external users, but labor unions, when they're determining what packages and benefits that their employees are going to get, want to see how the company's doing. Sometimes labor unions will understand that a company is struggling, and also when the company's doing really well, they want to make sure that the employees are getting the benefits that they deserve. What does this information affect? Well, it could affect the stock price of the company. Good sales, good revenue, good income, that potentially could make the stock price go up. Could affect whether you get a loan or not. Could affect how much you pay in taxes. Could determine whether you're able to issue more stock or not. Could affect the grants that you receive, the labor contracts that you sign up for, or even the ESG, environmental, governmental reporting requirements that are out there for the company to stay on the good list and continue to operate effectively. Well, I hope this video was helpful in understanding the challenges of reporting both internally and externally. My name is Professor Hungerford. I'm a full-time faculty member at the Simon Business School at the University of Rochester. In their MSA program, Masters in Accounting, I hope you'll consider coming to the University of Rochester. And remember, ever better, or as we say, Meliora.